The next bear market will spark a retirement crisis. Wow, those are very bold words. Hi, my name is Nate Krampe. I'm a certified financial planner, and living through 2007, 8, and 9 and helping individuals with their personal finances in that time has really taught me a lot about market volatility and the fluctuations in the economy. Now, I was recently reading an article by Howard Gold on the website MarketWatch. Now, he had a lot of things to say, but a couple of good observations about the future that I wanted to share with you. We've been talking about problems with Social Security for a while, and the U.S. government announced in June that for the first time since 1982, it's going to tap into the Social Security Trust Fund to pay current benefits to recipients, and it's also going to dip into Medicare's reserves to cover the costs of the program. Now, trustees also have projected that the trust, and they're talking about the Social Security Trust here, the trust fund will run out of money by 2034-ish, and Medicare fund will cease paying for costly healthcare bills, and they'll be depleted by about 2026. So, many of you have heard this and kind of some of those analogies, and what I've talked about before, this may ultimately make Congress have to either cut the benefits, raise taxes, or increase the eligibility age, or a combination of all of those. Moreover, we are coming up on the 10th year of a bull market in stocks and the economic recovery. So this is now the second longest expansion period in U.S. history. And when the next recession does come, it also would mean a big hit to state and local government pension funds, which, according to Wilshire Consulting, had about 65% of their holdings in equities as of just a couple of years ago. So with all of that, additionally, the nonpartisan Congressional Budget Office has come out and said the total federal debt was on track to be the highest as a percentage of GDP since World War II. So there's a lot that's going on out there. Now, many of you have already prepared for whatever the economy and the markets may bring, but far too many of you have not. And your retirement may actually be in jeopardy, whether we're talking about Social Security and Medicare or the money you've worked so hard to save over these years. So today's bull market is strong and the economy is strong. However, we need to prepare ourselves when the opposite becomes true. So going back to look at what Howard had wrote, the best thing you can do at this point is to prepare. Now, this means to make sure that you have enough money in your short-term buckets to pay dividends and interest with relatively low volatility. Now, what that will allow you to do is make the other portions of the money continue to keep growing over time, knowing that there will be some ups and downs, but as the future happens, as the stock market continues to grow over time, you will benefit. Now, there are many strategies to think about with respect to wealth preservation. Feel free to reach out to us. We'll do a stress test on your current plan, and this will allow you to better understand if any changes are needed. As always, take care. Have a great day.